Time for First Call with our guest today, real estate investor Dennis Mitchell. We have an email from Glenn who wanted to know Dennis's thoughts on Boardwalk REIT and how it might compare to peers like Canadian Apartment Properties or Killam REIT.
Right. So Boardwalk is a residential REIT, mainly apartments. The easy comp is that they are over-indexed to Alberta, where Sam Coleus, the founder, is from. By the way, Sam is a fantastic human being, as well as an excellent CEO. I've known him for 2 decades. We like residential real estate, quite simply, in North America. Tons of demand, very little supply. So everybody's got pricing power in terms of moving rents up. They are able to borrow CMHC insured debt, so their cost of capital is also very low. The residential REITs are trading at double-digit discounts to their net asset value. So basically, you can buy $1 worth of assets for anywhere from 85 cents to 80 cents. So that's always good. The yields are sort of in the 4 to 6% range. They tend to be tax efficient, so that's another lever for growth. And going forward, we're just not building enough housing. So the long-term outlook for residential is good. So the one issue you have with Boardwalk is you have to be careful. American investors tend to pile into the name as oil prices are rising because of the leverage to Western Canada, and they equally pile out of it when energy prices come down. So the only caveat or risk I would see in the short term is if you're expecting a global recession or a global slowdown, that may weigh negatively on energy prices, and that may weigh on Boardwalk in return.
All right, good context there. Okay, we are going to go to the phone lines. Jazz in Mississauga, Ontario. Hi there.
Hey, good morning, John. Good morning, Dennis. Thanks very much for taking my call. Dennis, just a question for you. I just wanted to pick back up on your conversation with John there earlier about private equity and how a retail investor can get involved with that. And really, ultimately, I just wanted to ask you, where could I initially just go and get some more information on that? Maybe Starlight has research paper op-eds, white papers on the subject, or if there's specific books that you can read. I may still use an advisor anyway, but it's something I've been interested in a little while, and just trying to get a better understanding of how you can go and invest in that market in that way. What are some of the financial statistics you want to be looking at? How you want to be, profiling companies? How do the returns maybe compare to the public markets versus the private? Just anything and everything under that umbrella. Yeah. Anyway, that's all. Thanks very much for taking my call. I'll lay up and listen. Thank you. Bye.
Sure. Great question. I really, really like the way that you're thinking in terms of educating yourself before you start piling into stuff. I would say where you want to start is with the large private equity shops out of the United States. So if you go to Blackstone's website, KKR's website, Carlyle Group, you'll find a ton of information on the private equity industry, right? You'll start to familiarize yourself with terms like DPI and IRR and MOIC and so on. These are all sort of return terms that investors like myself are focused on. You want to start there. There's a wonderful resource on YouTube. There's a gentleman, Steve Balaban, who does a great job sort of breaking down private equity, and he's got a ton of videos that talk to you about sort of the background of private equity, primary versus secondary, various real-world examples of deals that have been done. So I would highlight him as a valuable resource. But start with the larger private equity firms because they have a ton of resources and they tend to produce a lot of white papers. In Canada, Dawson Partners, Jan Robard, the CEO, is another fantastic source of great information on the industry, where it is and where it's headed. Highly recommend those as your starting point.
Great. We have an email from Max in Sarnia, Ontario, wanted your opinion on Northwest Healthcare.
Right. So Northwest Healthcare, as the name would imply, is a healthcare REIT. They own hospitals, they own medical office buildings, but it is extremely globally diversified. So you're talking about Europe, Canada, the US, Australasia. And so from that standpoint, it tends to have a complex structure because, of course, when you're dealing with a number of jurisdictions, you've got to create a number of interim entities that allow you to sort of reduce your tax bill and defer some of it. So over the last several years, they've made attempts to sort of simplify their structure. They've had some success, so they've now got an investment-grade credit rating. I would say there's still work to be done to sort of simplify the structure in the balance sheet as well. This isn't a name for us. While we do like the healthcare space, this isn't a name like hospitals are not something that I want to be investing in specifically. Medical office is not something that I'd probably be allocating capital to in a significant amount right now. I do have some exposure, some of my US names, but I'm more focused on seniors housing specifically.
Okay. Len is on the phone line, joining us early from Victoria. Hi.
Hello. Thank you for taking my call. And my question is on Allied Properties REIT. Do you think this is a good entry point? And that's basically it, what your opinion would be.
Okay.
Thank you.
Yeah, so Allied is an office REIT, but it's a very unique office REIT in that they own what we call Class I, which used to be sort of, well, the lion's share of the initial portfolio and the current assets are exposed brick and beam buildings sort of in the Queen West, King West area of downtown Toronto. It's beautiful real estate and exceptionally well located. And I would argue that the highest and best use of most of that real estate is not office. So there's a lot of embedded value there that could be realized if somebody one day stepped in and bought Allied and sort of redevelop the assets into residential or what have you. Now, in terms of Allied, they've suffered because, like everybody, from the pandemic. The recovery has been long and slow. There's been a lot of fits and starts in terms of return to office, no go home. So I would say that Allied is troughing. I don't believe it's fully troughed. So meaning that, I'll call it a U, and it's just a question of how long that base is. I would say you probably have a little bit of time before you can step into this name. If you're going to be very patient, you can deal with volatility, you can step into it. There are some concerns around the distribution. The payout ratio is very high. There isn't going to be a lot of cash flow growth this year or next year. So management has said that they don't intend to cut the distribution, but we'll see.
Okay, and we should mention, we talked earlier about RioCan. Your firm does own some
We do own RioCan.
Thank you so much, Dennis. Great to see you as always. Dennis Mitchell from Starlight Capital. And thanks to everybody for your questions. We couldn't get to all of them on the phone lines, but we appreciate you calling, and we'll be back with First Call tomorrow. The Open is up next here on BNN Bloomberg.